Welcome to the Contrarian Investor Podcast. We give voice to those who challenge a prevailing sentiment in global financial markets. This podcast is for informational purposes only. Nothing on this podcast should be taken as investment advice. Guests were not compensated for their appearance, nor do they supply payment in order to appear. Individuals on this podcast may hold positions in the securities that are discussed. Listeners are urged to educate themselves and make their own decisions. This podcast episode may have ads and the occasional announcement. To listen without ads or announcements and take advantage of a host of other benefits, consider becoming a premium subscriber. Visit the website contrarian.supercast.tech. That's TECH for more information. Now, here's your host, Mr. Nathaniel E. Baker.
Simon Johnson, you have written a book here with Darren Acemoglu. I believe I pronounced his name correctly. I was just going to say I'm glad it's you and not him because his name is hard to pronounce. But the book here is called Power and Progress, Our 1,000-Year Struggle Over Technology and Prosperity. And I read through this and there was something here that really jumped out at me. And it's about AI, artificial intelligence. And we hear a lot about this nowadays, ChatGPT, all this stuff, how AI is going to be this great opportunity, not just an investing opportunity, but an opportunity to enhance productivity, do a whole bunch of other things that are going to be great for humanity, great for corporations, if I dare say, and things like that. And you don't quite buy it. Tell me why.
Well, I think, Nathaniel, the core problem in our perspective is that the default trajectory we're on, the one that's driven by the visionaries of Silicon Valley, let's call them, is one in which the emphasis is on machine intelligence, which is sort of a little bit of code for replacing people with machines. And when we look back over 1,000 years of history, I mean, the book is basically the backstory of the generative AI moment, which is today. When we look back over 1,000 years, episodes when people have been replaced by machines have been much less favorable in their outcomes for most people than moments where we figured out how to use machines to make people more productive. Now, that's the key distinction that we need to focus on today again.
Got it. Okay. And I wanted to read something here from you. This is actually from the bibliography. It says, AI is likely to generate more limited productivity benefits than many of its enthusiasts hope, because it is expanding into tasks where machine capabilities are still quite limited, and because human productivity builds on tacit knowledge, accumulated experience, and social intelligence. Talk to me about that angle.
Yes, this is the idea of so-so automation, which Duran and his co-author Pascal have introduced in a Restrepo in a series of papers. So a good example would be self-checkout kiosks at grocery stores, where the work has been transferred onto the customer in part. They're okay, but they're really not great. And the productivity of workers has not gone up. The marginal worker, the additional worker you might hire, the effect on profits also seems to be pretty low, actually, in the self-checkout world. So mostly what they've done is sort of created more aggravation for customers that they have to put up with. No signs of like a major productivity breakthrough, for example, of the kind that we got when Henry Ford automated the factory line and for making cars.
Okay, so in what ways is the existing AI limited for that? Do you think, or do you know? And what are your ideas for how it could be better?
Well, I think the problem, Nathaniel, is replacing people completely, but that's the vision, right? So it's saying that we don't want customer representatives. We want an AI to do that instead. It's pretty difficult right now. I mean, and also you don't just want platitudes when you call customer service, right? You want somebody or something that can solve problems, that can mobilize resources, that can actually solve your problem. And usually it involves actually getting through to someone with sufficient responsibility, and that can be extremely aggravating. We would rather support a vision that's been there in the development of computers, but it's not the ascendant vision right now, which is use the machines and the algorithms to enhance individual capabilities, enhance what people can do. Just like we're using Zoom right now to enhance our ability to communicate and our ability to see each other. We could have talked on the phone before Zoom came along. Now we're using Zoom. It's much better, I think, for this kind of conversation. Let's look for opportunities to enhance individual characteristics and what people can do using AI rather than replacing people.
Yeah. Okay. Fair enough. And I don't want to draw away too much from the broader topic of the book, which is about inequality and how progress, or what we conceive as progress, has not always resulted in benefits for everybody. And in fact, and I'll throw in another quote here. I'll read another one here. We wrote this book to show that progress is never automatic. Today's progress is once again enriching a small group of entrepreneurs and investors, whereas most people are disempowered and benefit little. And AI, like I said, this is only just a chapter in this. It jumped out at me as one because it's so topical nowadays. But more broadly speaking, you think that these advances that we've made in technology, they don't necessarily benefit everybody. In fact, they can be a net detriment to most.
Yeah, absolutely. I think that's the pattern of the last 1,000 years, where we've had this long trajectory of technology improving and productivity improving. So you could say, well, what's there to complain about? But actually, when you look at the episodes more closely, there was always a struggle to see who would benefit. And in some of those struggles, including the medieval times, including the early Industrial Revolution, there was a huge amount of innovation and very few people prospered. Now, in the 20th century, it went much better. There was much more sharing of the gains from productivity increases. But after 1980, so 40 years ago, that sharing really receded, became much less salient, and we've had a widening of inequality in wages and in incomes. And many people who haven't finished college, for example, in the United States, have not gained in terms of real wages over the past 40 years. So that's kind of dramatic, considering that we continue to innovate. We've had the whole digital revolution. We've had a lot more pressure on companies supposedly to become more efficient. Where have those gains gone? Because they were real gains. They've gone to a few people.
So what is a potential outcome that can happen of this? What do you think needs to happen? What do you think will happen, if anything?
Well, I think on our current trajectory, which is sort of put the blinders on, charge straight ahead, try to replicate what humans can do, the so-called machine intelligence approach, I think we're in for a rough ride. I think we're going to be replacing intellectual labor, just like we replaced human labor early in the Industrial Revolution. And if that happens with big increases in productivity through automation, there can be positive spiller effects on the rest of the economy, and other parts can grow. But if what you're doing is really just replacing the people, shifting the balance of power, if you like, between capital and labor, and you're doing it really fast, which is what the whole GPT line of generative AI seems to promise, then it's going to be very hard to generate enough new productive tasks for the people who are either displaced or they never get an opportunity when they graduate from college or school. And we could be talking about a much bigger hit to our labor market than we've seen in a long time. What happens after that? Well, I mean, your guess is as good as mine, but those sorts of hits don't usually lead to good political outcomes.
And again, there is historical precedent for this, where new technology has caused there to be a lot of unemployment and things like that. And like you said, you see that the more recent advances in technology are more of the type that we saw several hundred years ago than what we saw in the 20th century. And the 20th century had plenty of hardship as well.
It's true. That's true. Although the Great Depression was mostly not about technological unemployment. And when we've had disruptions historically, it's mostly in places like the United States, caused low wages. So people get a job, but they're driven to fast food or other low productivity activities where their wages are lower. So we haven't experienced mass unemployment after 1980, not on a secular basis, but we have experienced a big widening of income differentials. So that widening, I'd say on our current course is set to become even larger.
Sick of me yet? Become a premium subscriber and avoid all ads or interruptions. Other benefits as well. Visit contrarian.supercast.tech for more information.
And importantly here, you also say that the businesses won't even necessarily benefit from this.
Yes, based on what we've seen so far, I think the productivity gains may be quite limited. Companies may still adopt it because it's fashionable and also because it tilts the balance of power in their view away from labor, so it makes labor more compliant. But the idea that there's going to be major breakthroughs like we saw in the early 20th century with mass manufacturing, that right now does not seem to be imminent.
Okay. So what is the remedy here for all this disconnect here between, I guess, power and technology and the inequality that we're seeing? Like, do you have anything to propose?
Yeah, we have three proposals that we're leading with right now. One is and all three are based on expertise of other people. To be clear, who've really deeply thought about these things, but we think we can pull them all together in one package. Jaron Lanier, the computer scientist, is arguing for data dignity, so that we should own our data and we should come together in various forms of agglomerations or consumer unions, and use that as leverage vis-a-vis the big data companies, the AI companies. I think that's very interesting, very important. And without that, probably other good things can't happen. The second idea is to really put very strong safeguards around surveillance. This idea is preeminent in Shoshana Zuboff's book, The Age of Surveillance Capitalism. And I think she's absolutely right. And there's a lot of bipartisan support also for constraining surveillance, not, however, support for that idea in China. And that may be the new split, the new global split, maybe, between people who are very careful and constrain surveillance and other countries and leaders who go all in on surveillance, the authoritarian countries of the world. And I think we may just have to recognize that. And the third piece comes from Kim Klossings, who is a professor at UCLA Law School, former senior Treasury officials, who proposes that we have a graduated corporate income tax on profits, based on how much profit you make. So it's based on the level of profit, like income tax is or should be. Right now, we have a graduated system, but it goes the other way. So small companies may pay more than big companies, as big companies can hide their profits. We need to flip that and say, if you're over, for example, $10 billion in annual profits, then you'd pay a tax rate of 35%. But if you lower in terms of annual profits in one company, you pay a lower rate. And of course, what that would do is give the companies an incentive to break themselves up, because their shareholders are going to be saying, hey, why are we paying 35% when we could be paying 21%? Let's create some value for the shareholders. And this would also be good for management, actually, create more opportunity. What we're pushing for there is plurality of business models. So don't just have, for example, two companies control the entire AI space. I don't think you can get there through regulation or through the courts, so it's going to take a very long time through the courts, but you can get there through the corporate tax system. And I think that's definitely something we should propose and push forward.
Oh, very interesting. Okay. I mean, isn't that a bit of a non-starter, especially considering that, let's face it, these political parties are bankrolled by corporations?
Well, it's an uphill struggle, of course, but that's always the case in any of these policy questions. And I think what we're going to see with AI is such a concentration of power and such a concentration of profit that people are going to be looking at that saying, wow, wait a minute, why did these guys have all the profit and it's not elsewhere in even the business ecosystem? Other companies are going to get squeezed. So within the corporate sector, I think there will be support for this. And this is not confiscatory vis-a-vis business. It's saying the largest companies with the largest profits should pay a higher corporate tax. But hey, if you want to make yourself smaller, you can go back down to where the corporate tax rate was in the past. Absolutely no problem about that. It's regulation through taxation, encouraging competition, which all the private sector claims that they like.
Yes, until they don't. I'm wondering if you have any thoughts here. This has come up before on this podcast with other book authors and academics who talk about and we've talked a lot about antitrust and how it was originally intended as a tool to kind of accomplish exactly what you were talking about, or at least prevent the opposite from occurring. And that's kind of not been the case recently. If you look at the numerous mergers that have happened, do you have any thoughts on that? Or is it outside your area of expertise?
But we thought a lot about antitrust in this context and more broadly. I think that the problem is, yes, it hasn't been used very aggressively. It's also evolved to be more effective against mergers and acquisitions as opposed to organic growth. And we're talking about organic growth primarily here. It's also obviously very targeted to, let's say, traditional forms of market power where you get a monopoly, you raise price and you squeeze consumers. That we can recognize. But when you give stuff away for free, or when you have other business models of the kind of platform digital economy, it hasn't been quite so effective. I think redress through the courts when there's conspiracy is a very good idea. The conspiracy to corner markets is generally illegal, but I don't think that's what's going to get us immediate action here. I don't think that's what's going to move the needle. You need to think more. It's in the age of AI and the age of generative AI, where there's creative problems coming at us from all directions, we need to get more creative on the solutions.
Yeah, fair enough. And you talk a little bit here about, and you just mentioned it, this idea of surveillance, and that would actually be one of the major advances, if you can call it that AI will bring about. And you said that one way to address this would be to just basically not allow it, not allow corporations to do it or limit them. But would corporations really be beholden to this? Because they can now, with at-will employment, they can limit people's freedom of speech, sometimes because they need to, and other things. So would that really be something that these companies would adhere to, even if they do agree to sign off on it?
Well, you're going to obviously need some enforcement on that, and you're going to need protection for individual rights in an appropriate manner. I think that's going to be very important. This stuff doesn't happen by itself. I'm sure you're right. The companies will lean very heavily towards more surveillance, as will local government, by the way, as will police forces, as will security agencies, and so on. So I think you have to put safeguards in place, and you have to have enforcement of them. The Consumer Financial Protection Bureau, which is not everyone's favorite by any means, has proven very effective in protecting consumers against the abuses, some of the abuses that we used to see in the financial sector. So I think that kind of focused consumer, if you like, rights, but of course it's also worker rights. And the good news here is that both people on the right and people on the left don't want unfettered surveillance in this country for slightly different reasons, but actually very related reasons. That they are, extremely concerned about who's looking over their shoulder, and with good reason, and they don't know who's going to be in charge of the government next time around, and they fear that might be used against them. So I think that's fair, and I think very strong, clear safeguards on that, and limits on what private companies can impose on people. That's going to be important, and you're going to see, I would suggest, in China, very different outcomes. We're going to publish this book, Nathaniel, about 20 countries, 20 languages around the world. We were approached by, including in Taiwan, we were approached by a mainland Chinese publisher whose representative said, well, we'd like to publish it, but this is what we need to cut out. And it was about a third of the book. So
I'm surprised it's only that little.
Well, perhaps they were offering us a special deal. I don't know, but we're not going to do that, obviously. Yeah. But that's because anything about social media, anything about the Communist Party, anything about surveillance, all of that stuff would have to go in those proposed cuts, because that stuff is very sensitive, because that's what they're doing.
Yeah. And you just raised an interesting point. I mean, you guys aren't necessarily after the money that would come from any proceeds you get from China, but many consumer-facing corporations are, and have had this exact dilemma and have effectively rolled over for the Chinese government to access those consumers. And so that's kind of a one issue where maybe this that doesn't speak very well to this whole thing and who might win, right?
Well, you're certainly right that many companies have gone out of their way to accommodate the Chinese government wishes, primarily, I think, because they thought that down the road there were future profits to be had from the Chinese market, which in many cases turned out to be illusory, by the way. Look, what a company does in China is, to some degree, its business, as long as they don't transfer sensitive technology and so on. But that shouldn't have any impact on what we allow in the United States. Also, I think it's very clear, and this is something that's come through more in the debate about the Chips and Science Act last year, for example, that we still have a technological edge over China in key aspects of technology, like semiconductors, that matter a lot for the development of AI. And we are not calling for a slowdown in that innovation, by the way. We want innovation to go more towards helping people, machine usefulness rather than machine intelligence. I don't think stopping innovation generally ever works. And if you try to stop it, people will just say, well, China's going to do it. And then you're actually going to get more support from the federal government, not less. So I think let's continue with innovation, but let's have more plurality of business models. Let's have more competition at every level of the supply chain for artificial intelligence. And let's do what we're good at, which is generating ideas that add value. And let's constrain and restrict what has been a bit of a weak point in this society for a long time, which is tendency to slip into unguarded surveillance.
Do you think is there no kind of market solution to this? Just to put on a purely capitalist hat here for a minute, and you have, if you look at social causes, for example, many private corporations, for whatever reason, have been at the forefront of pushing for some of these. And could it not be that there will be some new type of company that comes along with AI and does things the right way? There's not the whole idea of profit and, good doesn't have to be entirely divorced, does it?
Well, look, I think we're in the midst of an episode that can be summarized by Milton Friedman's saying, one of his favorite sayings, the business of business is business.
Yeah.
Right. So Could we have plurality of business models? Could we have alternative ways of organizing ourselves? Could AI empower that? Yeah, sure, absolutely. Is that what we're seeing right now? Is that what the sort of central driving force is? No. It's profit seeking. It's standard Silicon Valley type thinking. And I think we should be realistic about that, and we should deal with that on its own terms. And the key to that would be preventing them from being a monopoly of business models and a monopoly of mental models, actually, I would say. So I think the part of the danger of what we're getting from GPT and what we're seeing coming out from Google is that they're tending to a certain way of organizing the data and presenting the data and emphasizing this machine intelligence replace the humans aspect. And that's where you're going to see a lot of the businesses developing following that. Let's push it in a different direction and let's have the argument, and let's, we go see these people in person when they'll see us. Let's have these conversations in private. Let's have the discussions in public and see if we can move the business models towards a plurality of thinking about what's appropriate and so on. And let's, put the safeguards in terms of a very high corporate tax rate on mega profits, because those will be windfall profits resulting from massive market power that's in part power over our brains.
Yeah, that's the scary thing here. One of the many scary things that we've talked about. Do you have any idea? Have you seen in your travels, in your work, any companies that might be examples of doing things the right way that you talked about, or is it all just like really following the Silicon Valley venture capital type of thing?
Well, it's very early days. Of course, there is a plurality community that attempts to do this. It's coming out of, related to, but perhaps going beyond Web3. So those ideas are in the mix. I don't think they're particularly salient or well-funded or making a huge amount of progress. Certainly not compared to the GPT line of models, the large language models. I think that those are dominating the conversation right now. And of course, that's part of the problem, is that when you get the hype and you get the concentration of attention on a particular way of organizing data and doing business, that's where everybody tends to get pulled.
Okay, interesting. All right, cool. Simon Johnson, I want to come back and ask you some more questions, ask you about your background, what you've done prior to writing this book, and talk some more about it. But let's first take a short break. If you are a premium subscriber, you will not get the break. Don't touch the dial. We'll be right back. In fact, we already are. And to become a premium subscriber, visit the website contrarianpod.substack.com and sign up.
We hope you're enjoying this episode of the Contrarian Investor Podcast, where we give voice to those who challenge a prevailing narrative in global financial markets. Consider becoming a premium subscriber. For $9 a month or less, premium subscribers receive a number of benefits. Podcasts are posted immediately after they're recorded. Transcripts are made available within 24 hours. Premium subscribers get direct access to the host, and of course, there are no ads or interruptions. Visit contrarian.supercast.tech for more information.
By the way, you don't need the .tech suffix to get to that website. .com will do the trick. And we also have a Substack that where you can sign up for the same prices, same benefits, same details. contrarianpod.substack.com. So if you already have a Substack account and use it, or have the app and use that, that's probably the best way to go. So contrarian.supercast.com or contrarianpod.substack.com. Whole bunch of benefits, including, of course, getting this episode up to a week early without ads or annoying announcements. And you also get the daily Contrarian briefing and podcast that is released every market day morning at 7 a.m. This is a contrarian take on the events of the day ahead and what is likely to move markets, such as economic data releases, earnings, and other things. It is really good, and that is completely unbiased, of course. So check that out, contrarianpod.substack.com or contrarian.supercast.tech. Now on with the show. All right, welcome back here with Simon Johnson. I believe you are at MIT. This is the segment of the show where we ask our guest more about himself in this instance and what he did in his, up till now, in his career, And so very curious to hear, what you've been doing and how you came to write this book. I know you wrote another one that we want to talk about a little later for a different reason, but yeah, go ahead.
Well, in a nutshell, I'm an economist. I have a PhD from MIT actually in the 1980s, and I worked on economic development and financial stability and economics and technology issues for a long time. In the early 2000s, I worked at the IMF, and I was the chief economist at the International Monetary Fund, 2007, 2008. And coming out of that experience, I wrote a couple of books because, of course, we were in the midst of the global financial crisis. One was called 13 Bankers, about what had actually gone wrong with the financial system. Second book was called White House Burning, which was how the financial crisis had affected the fiscal system, because obviously we're experiencing a series of fiscal problems and fiscal debates in the US, including the current one on the debt ceiling again. And my subsequent book, the most recent book prior to this one, was called Jumpstarting America, which was attempting to look at a more sort of how do we accelerate growth and how do we spread the benefits of growth around the country. And that led me to this book, which is a 1,000-year backstory of how we get to this generative AI moment, what this moment means, and how we could do better in terms of shared prosperity if we study and think about some of the things that went right and some of the things that went wrong in that 1,000 years of history.
And before anybody thinks that this is all just kind of fancy talk, the previous book did lead to some actual outcomes in Washington, D.C., right? Tell me about that.
Right. So we published Jumpstarting America in 2019 and had some positive response, but limited response. We were proposing a big increase in science spending and to spread that around the country and ways to actually implement that. And I think what happened then was COVID arrived, and COVID, of course, was a massive shock to everybody's thinking about everything, including distance, including science, including how we organize production and society. And coming out of that, people were looking for ideas and sort of things to do differently and maybe a little bit better. And we got bipartisan support for ideas around the science funding and the science deployment of funding model that we had in our book. And this became a part of what's known as the CHIPS and Science Act of 2022. And we'll see how people do with that. Obviously, there's a lot of work to be done, but at the local and state level, there's tremendous enthusiasm for building scientific and technological capabilities, involving a lot of people in it. So there's a human capital education piece as well as a science piece, and it seems like there's funding available from the government as well as enthusiasm from private sector funders on commercialization. So early days, yeah, sure. But it was gratifying to push people in what we regarded as the right direction.
Oh, very, very cool. Very interesting. So I'm curious, like, as somebody obviously you were very involved with the 2008 financial crisis and have studied, human innovation, the history of it. So I'm curious where you see our current setup, if you will, with, we have this new forms of innovation on the one hand. We just had a kind of a mini banking crisis that may or may not be completely over yet. And the economic cycle seems to be winding down now after COVID. And there's always talk about there being a new crisis. But where do you view things in that whole thing?
Well, I think on the crisis point, crises are to be avoided because they get in the way of everything, right? They mess up everything. They hurt a lot of people. And I think we did well to avoid the broader problems coming out of Silicon Valley Bank and Signature Bank. Perhaps that could have been done a little bit better, but, it's a crisis. Things are always a scramble. So we'll see what happens as the Fed manages to decelerate inflation enough. We'll see if it's a soft landing or a harder landing. But the bigger issue, of course, and if you look at how countries do over a period of decades, is what happens to productivity, what happens to underlying growth, taking out the cycle, and what happens in terms of development and application of innovations. And we have this fantastic machinery for innovation in the US, but we've become terribly fixated on a few digital ideas that have been, they've been high impact, but they've not led to shared prosperity. They've contributed to a widening of income inequality. So isn't there a way we can take that same innovativeness and do what we did in the 40s, 50s, and 60s, which is create a model with much more shared prosperity? We have a new initiative at MIT, Initiative for the Study of the Future of Work, that is trying to develop exactly actionable items along those lines. Very private sector oriented, very much about getting the policies right, but also about constructing a narrative and helping people understand what's the economics of this, why does this make sense, how is this good for the country as a whole. And, I think the good news is a lot of people want to have this conversation, particularly after 40 years that have been a bit disappointing in terms of shared prosperity.
Yeah. What do you make of the argument that, what we saw in the 50s and, largely due to America being able to export stuff and now we become more of an importer, and also all the offshoring that happened. And that's kind of a genie you can't put back in the bottle anymore. Do you think about that at all?
Sure. Look, I think manufacturing can come back in the US. We can have an increase in manufacturing output. I don't think manufacturing employment will necessarily go up a lot. So that's the, jobs went offshore and are not coming back idea. However, I think we can create a lot of jobs around science and technology, innovation, for example. We can absolutely sell to the world. I mean, we're 320 million people in a world of 8 billion. That's going to 10 or 11, or some people say 12 billion. Those people have a lot of problems. We have the deep innovative capacity. We're much more able to invent things and deploy technologies than anyone else I've met around the world. And so I think you have to ask the question, what's the problem that we're trying to solve? What are the solutions that we're proposing? How much are we charging for that? I think America is extremely competitive if you see it in those terms. We do tend to trip ourselves up. We do tend to get very self-absorbed and have these crazy fights among ourselves. No one else can even understand what we're talking about. But once we get out of that, once you go beyond that, US is a tremendous positive force for the world for this century, and as far as I can see, beyond that. So as long as we can hit that and tap into that and not ruin ourselves inadvertently, I think we're going to do well.
I wonder if you have any thoughts on the US dollar being the reserve currency, and if that's going to be, because it's another thing that's very topical in the news right now, admittedly outside the scope of your book, but yeah. Well,
that was the very much dealt with in my 3 books ago, White House burning. So the US's reserve currency is obviously a massive advantage that's been conferred on us. The world lends us the capital that we use. We borrow, if you like, to finance our consumption, but also to finance a lot of our investment. And as long as they continue to do that, it's an amazing deal. And why would you rock the boat? The question is, how long will that continue? And I think it's unwise to assume that will last forever, although despite the disruptions of the past, let's say 20 years, including the rise of China and the global financial crisis, COVID, and now whatever we think is going to happen around AI, that the dollar is still very attractive, or more attractive than the alternatives, which is what it takes.
Right. Yeah, fair enough. Yeah. Okay. So do you think, like, here, putting on your political science hat, I mean, some of the stuff that you speak of, I mean, it does sound, pretty alarming. And if you look at the collapse of societies, I mean, it looks like some of this stuff has happened before and not to very good effect. Do you think we're at risk of that in the US? I mean, I'm assuming we're always at some risk of it, but how realistic is it to expect any type of actual political upheaval in the US at any point? Do you think about that at all?
So I'm an immigrant to the United States. I chose to become an American, and I really like this country, and I like its political system, which is not a fashionable thing to say. What I particularly like is we have a lot of open competition for ideas, and there's a lot of people who are looking for better solutions. There's a lot of pragmatic politicians. Governor Charlie Baker, former governor of Massachusetts, was at MIT a couple of weeks ago, and we were talking. He has a book talking about how to get things done at the state level. And I had 150 mid-career EMBAs and their bosses in the room, of all kinds of political persuasions, and they all loved what Baker was saying, and they said, yes, we need more of this kind of practical problem-solving approach. So I think this streak of pragmatism runs very deep in American societies. I do think that polarization is a problem, and I do think that polarized labor market outcomes, some people do well, a lot of people do worse and worse and worse. That is absolutely a problem in terms of making people angry, in terms of making them frustrated, and making them not believe in the political system. So without question, we've got some pretty big tensions in the US. I think we can find a way out of it. I think we can find better jobs for more people, and that will help it massively on all the other issues that we fight about.
Yeah, wow, that's so optimistic. You're sounding American, but yeah. So yeah, with that, I will put the link in the show notes for how you can pick up a copy of the book on your digital device or physically. And thank you, Simon, for coming on and talking with us. Thank you all for listening. And with that, we look forward to speaking to you again next time. Actually, wait, I forgot to ask you one thing, which is how people can get in touch with you whether you have a social media presence. I did follow you on Twitter, so you do have a small one.
Yes. On Twitter, it's called @BaselineScene. And we absolutely welcome people to follow us there and tweet comments, reactions to the book. We will be building a social media conversation. Not sure how much longer social media or Twitter will last, but I think that part of the social media is good, letting people engage on serious ideas seriously. So look forward to that.
Very cool. All right, yeah, check that out. And with that, again, we'll thank you for listening and look forward to speaking to you again next week. See you then. Bye.
Thank you for listening to the Contrarian Investor Podcast. We hope you enjoyed this episode. To subscribe to this podcast, simply open your favorite podcast software and search for Contrarian Investor. Follow us on social media by searching for Contrarian Investor on Twitter and Instagram. Send us your thoughts on feedback@contrarianpod.com. We look forward to speaking to you again next time.